Unexpected things happened on the crypto market after the eclipse, which shocked market participants. First, Terra's Luna fell apart, and now the Celsius network mystery has caused a lot of doubt in the cryptocurrency market. So, how will Celsius cope with this loss? And what should investors do to protect themselves from such a loss? Stick around to find out. As of May 2022, the cryptocurrency loan company Celsius Network LLC had given out more than $8 billion in loans and had $12 billion in assets under management, AUM. But in a surprising move, on June 12th, the company said it would stop letting people withdraw money from its platform, citing extreme market conditions. The fact that Celsius stopped withdrawals made the market even worse in mid-June, sending Bitcoin's price briefly below $20,000. With the Celsius saga going on, people have a lot of questions about the project, its management, and what's been going on with the network in the last 2 weeks. How do you say it? The Celsius network is a centralized platform that lets people earn money on Bitcoin, Ether, and stablecoins, among other crypto coins and digital assets. The lending protocol is set up as a bank, but it seems to work more like a hedge fund. Crypto lending is a lot like traditional banks' savings accounts, except that it uses cryptocurrencies instead of fiat currencies. Like in a bank, an investor opens an account, deposits cryptocurrency, and earns interest on the deposits with crypto lending protocols. Investors can make deposits in Bitcoin, stablecoins, or even less well-known cryptocurrencies that are more volatile. Most protocols pay interest in the same currency that was deposited, which makes the profits different. Like other lending protocols, Celsius promises certain annual returns that can change. However, the protocol's advertised interest rates range from up to 17% APY. The lending protocol lets people borrow money and put their cryptocurrency up as collateral. Other protocols besides Celsius have used CeFi or centralized finance, which is an alternative to decentralized finance, DeFi, in which users still work with a central intermediary. When users put money on the Celsius platform, they are promised a certain rate. In the last few years, there has been a lot of interest in the protocol, and the company has done very well. Notably, the company raised a huge $750 million in its most recent funding round in November 2021, putting its value at just above $3.25 billion. After the recent freeze on withdrawals, Coinbase, BlockFi, and Crypto.com all said that they would be cutting jobs. Things going on in the crypto world have added to the waves of selling in the market. According to reports, Celsius has hired Citigroup, a big bank, a law firm called Aiken, Gump, Strauss, Hoyer, and Feld, and management consultants from Alvarez and Marsal to look into possible ways to get money. On June 28th, the people in charge of Celsius tried to stay out of bankruptcy, even though advisors and lawyers said they should file for Chapter 11 bankruptcy. The protocol has been having a liquidity crisis for weeks, and there have been a lot of rumors going around the network lately. Notably, crypto Twitter is confused by the fact that the Celsius network is still giving out weekly rewards, even though withdrawals were stopped 2 weeks ago. Not only did the recent Celsius conundrum have short-term effects, but it also hurt people's trust in the network as a whole. Also, Celsius's place in the market can have a big effect on the whole cryptoverse. Celsius is one of the biggest lenders in the business, and if they start selling off their assets, it could hurt the market and make people feel bad. Some market participants and analysts have already thought that the company selling could be one reason why the market has been going down and staying in a range. At the moment, the bearish trend of the market as a whole has added to Celsius's tragedy, and it's not clear where the project will go from here. A report says that Celsius has hired the well-known law firm Aiken, Gump, Strauss, Hoyer, and Feld, AGSHF, to help them if they need to reorganize or go bankrupt. But Celsius still hasn't come out and said that it's bankrupt. But if the report is true, doing business with AGSHF tells you everything you need to know about Celsius's current financial situation, which is not good at all. What isn't said in the report is what this means for Celsius's future. If you don't know what else is going on, this piece of news is just more fake news. When the next bit comes in, it's forgotten. It shouldn't be, though. That is a very important part of the story that needs to be broken down. Let's talk about being broke before we move on. It's been a popular word lately, which is bad in and of itself, thanks to Celsius and Three Arrows Capital. Insolvency simply means that a person or business can't pay back its debts. If you think that sounds like bankruptcy, you don't know what bankruptcy is. When you can't work something out with your creditors anymore, you have to declare bankruptcy. This is all about that difference. With insolvency, you can show your creditors that you will be able to pay them back, even if you are in Schitt's Creek. In other words, you have bought some time for yourself. Now that we understand what it means to be insolvent, let's look at restructuring plans. It's when a company is forced to make big changes to how it works or makes money because it's in trouble. If you think that's too general, you're right. But plans need to be flexible because they can take many different shapes. Restructuring could mean getting ready to sell, buy out, or merge with another company. Or it could be a change in the business plan or in who is in charge. At the end of the day, it doesn't matter much how the restructuring is done. What's more important is to show creditors that the business will be fine in the long run. When you look at it this way, you could say that a plan to restructure is a compromise. Here's where the lawyers come in. A company has to negotiate with its stakeholders, who are then given complicated legal rights. Then arbitrators get involved, and it just gets really expensive. The point is that this could be a way for a business to stay in business. Is Celsius able to make even a small deal with its creditors? There are good reasons to think that they can. For one thing, Celsius has a lot of Ethereum that is locked. The savings and loan has put money into Bitcoin mining on top of its main business for 2 years. Those are good assets to have going forward. The law firm they just hired is also a plus. People think that AGSHF is one of the best lobbying firms in the United States. Its alumni include Jeb Bush's son, so it's not surprising that they are known for being able to get things done on Capitol Hill. Not only that, but several senators, both now and in the past, worked for the company. Its current roster probably has a lot of people who aren't senators and didn't want to take a pay cut. AGSHF is in the top 10 in salary. In short, they cost a lot and are linked. Those connections are important. AGSHF has a lot of experience with restructuring plans, but usually from the side of the creditors. Celsius will need doors to be opened and credit lines to be given to them so they can stay in business. We can see this happening already because there are rumors that Celsius has asked Citigroup to help them with financing. This, of course, depends on a lot of big ifs. Anyone who has been in crypto for a while knows that many of the partnerships that get a lot of attention don't end up working out. AGSHF could say that it would be best to sell off assets and pay off Westcap and the Teachers' Pension Fund. Or they might think Nexo's offer is a good deal. These would probably cause investors to lose some or all of their money. You can still file for bankruptcy, but as we said before, there are still some good choices. At this point, all we can do is guess. What matters is that not everything is lost, for now at least. Many well-known companies have come back from similar situations, some even more dire. Take Apple, GM, Tesla, Sbarro, etc. The fact that Celsius is run from one place gives it a clear advantage over protocols like Terra. When Terra began to fall apart, they had nowhere to go, but on Celsius they do. That's the benefit of having a business with a legal address in the US. When you're in trouble, you can get help through the right channels. If there's one thing we can learn from history, it's that the US and its legal system are pretty good to big businesses. When we look at all the evidence, it seems that there is a way for Celsius to stop being broke. But whether or not Celsius comes back from being bankrupt and makes everyone whole is a whole other question. Don't forget to leave us a like and subscribe to our channel to get notified with our latest editions. See you soon on a brand new video.